Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Cincinnati Financial Corp. Quarterly Report. Cincinnati Financial Corporation provides a wide range of businesses and services through its 5 segments. These include insurance products plus commercial lines, casualty and property auto, workers' compensation, contract and commercial surety bonds, fidelity bonds, management liability, and machinery and equipment insurance plus personal lines. Auto homeowner, dwelling fire, inland marine, personal umbrella liability, watercraft coverages plus excess and surplus lines, commercial casualty, excess liability, professional liability, errors and omissions, miscellaneous coverages life insurance, plus term life insurance plus universal life insurance plus worksite and whole life insurance plus annuities investments, plus fixed maturity investments, taxable and tax-exempt bonds, redeemable preferred stocks, plus equity investments, common and non-redeemable preferred stocks, additional services, plus commercial leasing and financing, plus insurance brokerage. The recent surge in Cincinnati Financial Corp stock price can be attributed to its robust third-quarter earnings and consistent history of beating analyst expectations. The company's Q3 2025 results exceeded forecasts, with a significant increase in net income, earned premiums, and total revenue. Additionally, underwriting profitability improved due to a less active catastrophe environment. These strong financial outcomes have driven the stock price up by 8.25% over the past year, making Cincinnati Financial Corp an attractive investment opportunity for investors seeking stable returns. The primary drivers of revenue growth for the company are largely attributed to increases in earned premiums, investment income, and fee revenues. Earned premiums rose by 12% year-over-year, while investment income grew by 14%. Fee revenues also saw a significant increase of 25%. Additionally, agency renewal written premiums experienced growth, driven by higher average pricing on these policies. On the other hand, revenue decline is primarily due to decreased premium revenue, reduced investment income, and increased claims and litigation-related expenses. Disruptions in distribution channels and decreased economic activity have led to lower premium revenue, while reduced dividend payouts have impacted investment income. Net income and profit margins experienced fluctuations between Q3 2024 and Q3 2025, as well as year-to-date (YTD) comparisons for 2024 and 2025. Net income rose to $1,122 million in Q3 2025 from $820 million in the same period of 2024, but declined to $1,717 million YTD 2025 compared to $1,887 million in 2024. Profit margins also showed variations. The net income margin increased to 30.2% in Q3 2025 from 24.7% in Q3 2024, but decreased to 18% YTD 2025 from 21.3% in the same period of 2024. The reasons behind these changes are attributed to several factors. Investment gains and losses had a negative impact on net income, decreasing by $264 million in 2025 compared to 2024. However, premiums and reinsurance receivable increased by $168 million, indicating potential revenue growth. Loss and loss expense reserves also rose by $379 million, which may indicate an increase in claims or expenses. These factors collectively contributed to the fluctuations in net income and profit margins between Q3 2024 and Q3 2025, as well as YTD comparisons for 2024 and 2025. The company is indeed generating positive operating cash flow, as evident from the financial summary provided. The net cash provided by operating activities has consistently increased over the years, with a notable jump in 2025 to $2,165. Additionally, the cash flow from operations for the 9 months ended September 30, 2025, stands at an impressive $1.911 billion. These figures clearly indicate that the company is successfully managing its finances and generating sufficient operating cash flow to support its growth and operations. The company's debt level has experienced a slight increase of 0.7% over the past year, rising from $850 million to $858 million. However, this growth is not uniform across all types of debt. The principal amount of long-term debt for senior debentures due in 1998 increased by $1 million. Meanwhile, long-term debt as a whole saw a more significant increase of 1.7%, rising from $860 million to $877 million. In terms of interest expenses, there has been no change over the past year, with the company reporting an unchanged interest expense of $27 million in both 2024 and 2025. This suggests that despite the slight increase in debt levels, the company's interest expenses have remained stable. The company's financial performance varied across different segments and regions. The commercial lines insurance segment saw a significant increase of 9% in revenue and 38% in income before taxes, while the excess and surplus lines insurance segment experienced a notable surge of 12% in revenue and 125% in income before taxes. Life insurance also performed well with a 6% increase in revenue and 70% in income before taxes. On the other hand, personal lines insurance suffered a decline of 15% in income before taxes. The commercial lines segment faced challenges, particularly in its property line of business, which contributed to an increase in large losses incurred. Catastrophe losses also fluctuated, decreasing from $282 million in Q3 2024 to $83 million in Q3 2025. Management's outlook and strategy. A positive future ahead. Management is optimistic about the company's future performance, citing ongoing efforts to improve pricing and loss control practices as key drivers of growth. The company aims to increase cash dividends for the 65th consecutive year, reflecting its strong operating performance and positive outlook. In terms of investment strategy, management believes in investing in blue-chip, dividend-paying companies as a good long-term approach. They aim to maintain an average GAAP combined ratio within the range of 92% to 98% over any 5-year period. The company is also focused on prudent underwriting practices, with a goal of improving pricing precision and loss experience. Management intends to remain cautious in reserving for estimated ultimate losses until longer-term loss cost trends become more clear. In terms of risk management, the company's greatest exposure lies in its investment portfolio, but management believes they are adequately positioned for rising interest rates due to their strong surplus, long-term investment horizon and ability to hold most investments until maturity. Overall, management's outlook is positive, with a focus on driving growth through improved pricing and underwriting practices, while maintaining a prudent approach to risk management. The company has a history of paying dividends, with significant amounts declared in recent periods. In the 3 months ended September 30, 2025, the company paid out $136 million in dividends, while over the 9-month period, this figure rose to $407 million. The cash dividend per share also increased from $0.81 in Q3 2024 to $0.87 in Q3 2025, indicating a commitment to rewarding shareholders through regular payouts. That concludes the financial summary for Cincinnati Financial Corp. Feel free to comment below, and I will be happy to answer them when possible.